my experience realized that to calculate the capital gain is complicated.
How did you first get interested in tax law?
Well, that's a great question. Appreciate you bringing it up. I had a lot of friends who were Americans living in Panama, and they were very concerned about the new FATCA laws that had come out at the time. This was in roughly 2015 or so, and they're all very concerned because they owned foreign corporations. So I wanted to help them, so I realized I could become an enrolled agent and prepare tax returns and represent them before the IRS if necessary. So I had developed quite a large practice helping people with foreign corporations, the Americans, report that to the U.S. on their tax returns, because Americans have the misfortune of having to file their taxes on their worldwide income, regardless of where they live in the world. And that was the case. And then in 2017, I had come back from traveling to Europe for the summer, and all my friends were just ecstatic about this thing called Bitcoin, and they were just giddy. The prices were going up, and I was kind of wondering what the tax implications were, because it's kind of a new asset class. And in January of 2018, I started to work part-time for a company that was doing tax preparation for cryptocurrency investors. I figured this was a great way to get into understanding that ramification. So I started working for them, and it was kind of interesting because within, there was a CPA at the firm. The rest of them were all just tax preparers, and then the head of the company. Within 2 weeks, the CPA had left the firm, and I, as an enrolled agent with a law degree, I was the lead technical, law advisor for the company. I was telling them how cryptocurrencies were being taxed, after only 2 weeks. But I'd gotten a great foot up from the initial CPA who I worked with. And then I just started studying the law and just wrestling with how the law interpreted cryptocurrencies as opposed to stocks and other investments. After about 6 weeks of working for them, I realized that they were going to go under financially, just had cash flow issues. So on my own practice, of course, was picking up at that time. And I discovered I had a lot of clients already who were cryptocurrency investors. So I started learning how to do the gain calculation and then how to report that on the tax return. One of my customers at that time was a guy who had prepared a return for in the prior year, but we had not reported any cryptos. He was just out of college. And he came to me, this would be like in 2019, he said, "Hey, Clinton, in 2018, he said, I hear you're doing cryptocurrency. I think I need to change my tax return. I made a lot of money the prior year in 2017 in cryptos." We did the gain calculation, had like a couple 100,000 transactions, and he turned out he made $16 million in 2017. He was kind of a trader basically doing arbitrage between exchanges because of price differentials, and he was aggressive at it. Well, he voluntarily, if I might add, paid $6 million in taxes as an amended return, which, is kind of shocking. I mean, that's kind of, it's really hard to write that check or, to transfer that funds. But he said, "Hey, look, if I don't do this, I know the IRS is going to come after me." So, I salute his honesty, and he did pay it. And I can tell you that a lot of people would fear that they wouldn't make enough money if they had to give back $6 million. But I can tell you, just last year, I think he made $32 million in profit. So, you will not go broke paying your taxes, as long as you pay them on time, and he is actually proof of it, and he's still my client. So now that's how I got into it, and now we're quite a large firm. I have 25 employees, and we're the lead firm in the U.S. doing full service crypto gain calculation and tax returns.
Before diving in, can you share with what initially sparked your passion for tax law?
Well, I think my passion for tax law came from, really this new FATCA law, which put a burden on Americans around the world to disclose their foreign bank accounts. And then realizing that we had to report foreign corporations. And it's like, this is very complicated. A foreign corporation return that you add to your U.S. tax return on average right now is about 27 pages. That's significant. And especially if you just have the foreign corporation to hold ownership of a house, it's just way over the top. But I enjoyed digging into the law and digging in and understanding how it applied to different situations. I can tell you this. My first client, I had flown up to Canada to take an exam, and a client of mine here in Panama at the time, she said, "Talk to my friend up there in Canada, in Toronto." So I did. Had lunch with her and her husband, and I told him about the FATCA laws, foreign account reporting laws, and all that. And turns out she was roughly in her approaching her upper 50s and she had been born in the U.S., moved to Canada with her mom and her sister, and they had never become Canadian citizens. They just still lived on their U.S. tax return and had no idea that they had to file tax returns in the U.S. And I told her, well, you have to report every bank account. And she disappeared to go to the bathroom. She came back from the bathroom, whipped out her checkbook, and wrote me a check for $5,000 to get started. Now, this is my first client. I mean, I had no idea what hourly rate to charge. Turns out I did the tax returns for 3 years to get caught up in amnesty with her sister, and her mom. So about 9 tax returns. Her mom had created over 120 bank accounts and investment accounts. She had a lot of money, and she didn't believe in leaving it in one institution. So she spread it around, and every bank was in Toronto. Yeah. And she put her daughters as co-signers or co-owners of these accounts. So then we got into looking at are these passive foreign investment corporations, and the tax laws are very complicated. So her tax return was 250 pages long, and it forced me to dig in, understand these complex laws. And this is my first client. So it was an amazing experience and set me off on an adventure I've enjoyed ever since.
She took the diversify advice very, very strictly.
Well, I think they filed their returns, and then they all renounced their U.S. citizenships.
Clinton, what was the aha moment that made you see the need for specialized crypto tax services?
With crypto tax service is, first of all, is wrestling with understanding how to file it, but also realizing that there's a lot of similarity between cryptocurrency tax returns and expat tax returns, because at that time, back in 2018, almost everybody was trading on foreign exchanges. Binance, KuCoin, these exchanges were the number. I mean, you might have gotten in on Coinbase, but you swiftly went to Binance to buy or sell everything. That's at the time that was the place to go. But this was a foreign account. Did it classify as a foreign bank account? Was it a foreign exchange? Do we have to report this on the FBAR forms, these anti-money laundering forms that Americans have to file? So it really forced me to dig in and read the law. And in the process, I became one of the head experts on how to apply it to cryptocurrencies.
How did you shape the mission and evolution of crypto tax audits?
My experience realized that to calculate the capital gain is complicated. The tax laws are complicated. Even if you had clarity of the tax laws, the mere challenge of actually doing that was difficult. And we dealt with like the one client I told you that had a lot of 16 million gain. He had 250,000 transactions that year. I mean, because he had set up automatic trading robots that did that. And it was very complicated. So we realized that you just couldn't ask the person to tell you how much they made. They really didn't know how much they made. They had, maybe in their heart, they had a sense, but they couldn't tell you exactly. So that's where we decided to focus on being full service, doing the calculation for them. And people have always appreciated that. And that's why, actually, part of the reason why we have such loyalty in our customers is, I have most of my customers are extremely large traders with large portfolios that really rely on us to do the whole gain calculation for them.
Were there any early challenges or surprises when working with crypto clients that you remember?
Well, I think part of the challenges was really explaining, and it has been even up until recent years, is when are cryptocurrencies taxed? Now, we're talking about U.S. tax law, and other countries tax things differently than in the U.S. But in general, most countries will look at it as a capital gain, that is a gain in the value of an investment. So so the challenge is, what did you buy it for? Trying to figure out what you bought it for. You sold the asset in the past year, but what did you buy it for? Was it to buy it last year or 5 years ago? How do we get those records? How do we compare it? The comparison would be this way. If you owned some stocks in a brokerage, say you invest, let's say you had an account at Fidelity Investors brokerage firm, and you had Google stock and you wanted to buy Apple stock. Well, first of all, you had to sell the Google stock and get the dollars, the value of it in your account. And then a couple of days later, once you had the dollars, then you could buy the Apple stock. What's different with crypto investing is I can just say, swap the Google for the Apple, and without ever going to cash. And because you're not going to cash, a lot of taxpayers would think, well, I never cashed out. I never made a money. I just changed the asset. That wasn't, they'd feel like they never really experienced any gain. But in the tax law, it reads that it's sale or exchange. It's very clear in the interpretation of it. And that's been a hard lesson for a lot of people to learn. But I think the word is out now that people understand that.
How have you seen the crypto tax landscape change since you started?
The tax landscape changed. Well, in terms of service providers, there were a lot of companies back in 2018. There's probably maybe between 1 or 2 dozen companies which are online. They called themselves, crypto tax calculation firms. Really what they did was they calculated cost basis of your trades. And they all did it. There was so much competition. They all did it for a very low price, like a couple $100s, whereas we were charging in the thousands. But people struggled doing it themselves. They became very frustrated. Then in 2020, we had the explosion of DeFi. Now, DeFi was a totally different way of engaging. There were no transaction records at an exchange to summarize what happened. You had to go onto the blockchain to pull the transaction records off. This was a significant hurdle for the competitive landscape because many of the players just simply couldn't address the complexity of that. So that by the time we have 2021, end of 2021, we're down to less than a dozen companies doing that. And now at this point in time, I would say there's 8 firms that are doing this sort of do-it-yourself gain calculation. Of those, really only 4 of them have the capacity to handle large and complex trades and complex DeFi. So there's that environment continues to dwindle, I feel. And, what we've seen is a massive growth in the full service gain calculation where people say, look, it's just crazy. I want you to do it. And we believe that we actually save people money by having to, because we do a better job calculating it, and that results in lower taxes and pays for our bill. The proofs have turned out that that's exactly what happens for medium to large investors.
And regarding that answer, Clinton, on your LinkedIn account, you mentioned that crypto traders are low-hanging fruit for the IRS. Could you explain why that is and what traders should watch out for to avoid becoming easy targets?
They are. I've written 6 books or 7 books, and that was my second book I printed. Crypto traders are low-hanging fruit for the IRS in a couple different ways. One is many of them simply never report their crypto income. So all the IRS has to do is show that you had experienced some income in excess of $10,000 and that you failed to report anything and that you knowingly didn't report anything. In that situation, they actually have the ability to charge you with criminal tax evasion. Now, whether a judge thinks that you typically they would need to go way beyond showing $10,000 of unreported income. But for most crypto traders, that's easily up into the 100,000s. And I've had clients who have been criminally prosecuted by the IRS for failing or incorrectly reporting their cryptocurrency incomes. So they've gone to prison. So this is one aspect. The second aspect of low-hanging fruit is the fact that people didn't report it on their foreign bank account returns called there's 2 of them that the IRS has, anti-money laundering forms. One is called the FBAR, Foreign Bank Account Report, and the second one is Form 8938 for specified foreign financial assets that you should report these accounts on. There's no tax associated with reporting your balances, but failure to report it when you should have can result in significant fines and extensions of your statute of limitations. So it's very significant.
Yeah, got it. Clinton, what are the biggest tax mistakes you see crypto holders making? What is the biggest tax mistakes?
A couple of mistakes. One is on the U.S. tax return. There is a question just after what's your name and what's your address. It reads something to the effect of, did you buy, sell, send, receive, or have exchange with value in digital assets or virtual currency? A lot of people are afraid to check yes, but in fact, the safer answer is to check yes, because if you say yes and you didn't, well, that's not real bad for you. But if you check no when you actually did, then you're setting yourself up for a claim for having filed a fraudulent return. So, when that happens, they can suspend your statute of limitations protection of 3 years on an audit. That's mistake number 1. Mistake number 2 is not reporting all your gains as we talked before, anytime I exchange one currency for another currency, I experience some sort of gain or loss in the fair market value in terms of US dollars. So you need to report all those exchanges. And the third one would be to think that I don't have to report foreign exchanges. And this is kind of complicated because some of the foreign exchanges don't want US persons to be trading on their account. Yeah. So people will get a VPN to trade on those exchanges because, you know, it's where they want to be trading. But then they realize, then they think, well, they think that somehow they're going to get in trouble with the IRS. And the answer is no. IRS does not care where you trade as long as it's not located in Iran, Russia, or China. All right. So, in North Korea. So other than those four places, you could trade anywhere in the world. IRS doesn't care. You still have to report it. So that would be the final big mistake. The other one is not reporting your staking and rewards income on your tax return as other income.
How does crypto tax audit help protect clients from IRS audits and penalties?
Well, we have, as I described before, most of our clients are quite large, quite wealthy, and are extremely afraid of the IRS coming after them. So we developed a unique product in our industry targeted just for clients who are crypto investors. It's called Tax Shield and Audit Defense. And what we do, the Tax Shield is it's very affordable, $495 a year. We will monitor your IRS accounts online on their systems, and then on a weekly basis, we pull that information. If we ever see an audit flag being raised on one of your tax returns, we'll see the flag, and then we will let you know about it, and we can discuss it. Typically, that flag occurs 2 to 6 months before an audit starts. We've actually had clients who got flags, discussed the problem with them, amended their return, and prevented the audit from even happening in the first place. So we know it really, really works. And we also have programs beyond that where you can actually, like car insurance for your tax return, where for a monthly amount, we will defend you in audits if the IRS selects you for an audit of your tax return, whether it's cryptocurrency or not.
For DeFi users and NFT traders, how should they approach reporting the transactions?
So, good question. DeFi users, although you're not working on an exchange, it's decentralized, you're experiencing two types of events. One is you're doing some sort of exchange, perhaps, and there's going to be a capital gain on that type of activity. Or with DeFi, you may enter into a smart contract which yields rewards of some sort. So let's say you coins into an Aave contract and it's giving you an interest payment in terms of some other token. So, how do we look at reporting that? Well, there's no tax on the Aave investment directly itself because it's a lending arrangement. Interest you make on it, that is taxable. So, we got to help identify when that happens. You get into DeFi gets into some really complicated ways of trading. So, for example, one would be like a wrapped coin. Let's say I have Bitcoin and I want to wrap it, and then I want to put that up as collateral against some other asset which I'm getting. So, is wrapping the Bitcoin a taxable event? That's a great question. It's a taxable. We feel it's not a taxable event because you've not given up ownership of it. You just simply put a wrapper around it, and you've moved it around to do different things. Now, if you ever give up ownership of the wrapped Bitcoin, then that you have sold it and you experience a gain from the cost basis of the original Bitcoin. So a little complexity. With DeFi, we get into some complexity trying to read some blockchains. The blockchains, some of them are imperceivable or difficult to understand what's going on because you can't understand the smart contract. But generally we work through that. With NFTs are considered unique, and therefore there is a capital gain every time ownership changes. You as a creator, if you're constantly getting a royalty payment back whenever there's a change of ownership, then that's income to you as the owner. And you're also, as the owner, not as the owner, but as a creator. If you're the creator, when you create that NFT, you have a cost associated with the creation of it. And that is not a capital gain event when you're a creator. You're selling it for profit, it's a business. You're selling for a profit, and you had some expenses in creating that NFT, the tools and the applications that involved in getting it sold. So that's kind of, you get into some real complexity, and there are some gray areas. How do we tax a liquidity pool? How do we tax rebasing assets? These are get into some very complicated interpretations and gray areas. And there are some areas in the tax code where it doesn't apply. There's no real application to how cryptos would fit into that. So there are some areas where you would maybe not have a reporting obligation because of the vagueness of the tax code.
What tools or best practices do you recommend for staying compliant year-round?
Good question. You should always calculate your capital gains. If you can't do it yourself, you need to pay somebody to do it for you. And if you can't afford to pay someone to do it for you, then how do you report this? Just because you did the trading doesn't mean you understand how the capital gain is calculated. Okay, so that's a flaw a lot of people make. Plus, to use the online tool, especially as you trade more and more trades on multiple exchanges and DeFi, it becomes complicated. And just because you're the trader, you may not understand how to make the tool work to give you the right answers. In general, when you use these tools, you're going to generate a higher amount of capital gain than actually happens. You tend to spend all your time fixing that problem to bring your total capital gains down. So this is why when we do full service, we generally do a better job than other clients, because we recognize all those problems and we get you to a lower number. Here's a trick that your listeners can use. All of us have a sense in our hearts in terms of how much gain we made last year. Most of our trades did nothing, right? Small losses, small gains, but we had a couple winners, we had a couple losers, big ones. And we know roughly where we're at. And you should not file a tax return that reports more income than you genuinely believe that you made. And if you then, in fact, we have advised certain people to report their estimate, because they don't have the money to pay for the capital gains. I said, look, just report your estimate. Let me give you a story. A client came to me in August of the year. He had not filed his tax return yet. He had worked with another do-it-yourself online capital gains tax calculation service, and he didn't believe the number that they used. Now, this guy had a lot of money, so this online firm said he had 120 million in profit. Now, your clients, listeners of the show, you didn't make 120, but maybe in your life, this replaced million was thousands. So this client, I asked the client, how much do you think you made in profit? He said, in the prior year. He said, I made between 40 and 80 million. I said, so if we split the difference, 60 million, you would believe that number. That's a fair number in terms of the profit. And if you paid taxes on the 60 million, you'd feel comfortable with that. He said, yes, I would. Now, since it was late in the year, because even with extension, you only had a couple months to get it done. We couldn't calculate it in time. So we just filed his estimate of 60 million and he paid taxes on it. Well, I think in November, we finally finished that gain calculation. The exact number he had was in 61 million. So even with someone who's doing 5,000 trades a year, big numbers going around, he still knew here right where he is at. So don't report anything you don't believe in. And you have to push yourself to like really think about it, but don't do that. Otherwise, you'll be paying too much. There's no glory in paying too much money to the IRS.
Very, very good advice. What are the first concrete steps someone should take today to get their crypto taxes in order?
If you, let's say you're somebody who hasn't been filing for a while, the first thing you need to do is you need to gather your transaction records from the exchanges that you were on. And generally, if you're using an online service or if you're using our company, we're going to send you a document on how to pull these transaction records. Online services, they have their own way of communicating that to you, but you're basically going to pull the transaction records from the exchanges, either as an API key or a CSV file of all the trades. If you did DeFi trading, we're going to have to pull that off the blockchain addresses of your wallets. So that's the starting point. And you should try to do the gain calculation yourself. If you are overwhelmed by that, then you should contact our firm to have it be done full service for you.
Clinton, many wonders how are crypto losses deductible and how can they reduce their tax burden?
That's a great question. So look, you pay taxes on your net gain. That's your winners minus your losers, because over 70% of our trades are losses. So you only pay tax on the net. So some people have thought you only pay taxes on the gains, which would be a lot more tax than you should. The second type of loss, there are other types of losses than just capital losses that have an impact on your taxes. You may have been subject to a scam, a rug pull, maybe somebody came in and stole things off your account, a number of different ways. Well, there is a way, and we have on our blog site and YouTube site, we have videos on how to do this. But basically, you can report that as an investment loss. And what that means is you get to write off that value on your deductible as an investment loss. And that's pretty powerful because, that's reducing your taxable income, and which, depending upon your tax bracket, you're getting like a third of that loss back. Now, you can only report something as a loss, an investment loss, if you're not able to claim it as a capital loss. Can't do both. So, but most things are capital losses. Say, for example, you bought a coin and it just went nowhere, and the developer stopped using it. So the value of the coin went next to zero. So we pretty much could write that whole value off as though you sold it for $0 and treat it as a capital loss. But the other losses, if you have theft, rug pulls, pig butchering scams, you can write them off as investment losses. And that's great. I was just at the Bitcoin conference. One of my clients came up and said, hey, you helped me report a loss that I was able to reduce my taxes by $40,000 because of that. And it made a big difference because nobody else could explain how to do that. So that's why people come to us and stay with us.
For sure. What advice do you have for Latin American investors using U.S. exchanges regarding tax risks?
My advice would be, you're experiencing capital gains and losses throughout the year. And as you sense that you have a gain, you should set aside some of your gains, set it aside in a fiat account to pay your taxes. And you might remember back in 2017, Bitcoin hit 20,000 all-time high. Everybody was giddy. At the beginning of January, a lot of people said, yeah, I'm going to pay my taxes. Bitcoin is up at 20,000 that first week of January, and all the other coins were at highs. Well, within 1 month, and people were holding their tax money in the best place they knew how, which was in other cryptocurrencies.
Yes.
In the period of 1 month, the value of Bitcoin collapsed by 50%, as well as all the other coins. Some coins went down to 90% by the end of the year. And people who started out wanting to pay their taxes in January, all of a sudden come April, they didn't have the money to pay the taxes because they'd kept it in cryptocurrencies. So my one piece of advice to you is to save your tax money in US dollars. It won't go down. I even had a client who listened to my advice back in 22, and so he saved his gains. He saved at the end of 2021. He saved a lot of money to pay his taxes. He saved it in a very popular stable coin at the time called Luna, and he had saved $1 million in Luna. And by the time he came to pay his taxes, Luna had collapsed, and he had lost all the money. So, and he had it in Luna because he was getting interest at you might remember the Anchor protocol. He was getting like 19% interest or something silly.
Yeah.
And my advice to you is save your tax money in dollars. Don't gamble with your tax money.
Yeah, great advice in the currency that you are going to use to pay the taxes. So it's a great.
Yes.
Clinton, when I'm talking with person with a lot of experience and knowledge as you, I really enjoy and can be here forever, but the time is almost over. So can you share with us how to contact you, how to start learning from crypto tax audit, and how to get started?
Well, there's a lot of, we really try to bring a lot of useful information out there. You go to YouTube, we have the Clinton Donnelly show. And I'm told I have 700 videos out there. So lots of information. We share with everyone. You go to our webpage at Crypto Tax Audit, which you have on the display there. And that's a starting point that you can contact us at the contact page. You can speak with me or one of my other directors that are shown there. When you talk with our company, you talk to one of the directors. You're not going to talk to an entry-level employee. So you can see we've got Sarah DePino, who's our head of tax, Ben Weber, who is our head of crypto gain calculation, as well as Kent Bowen, who handles audits and tax court. And you can speak with one of them directly, and we'll give you a price for doing the work for you. That would be the second place to go. You can have a private consultation where you can talk about your unique situation, and we can tell you how we can protect you. Because one thing we haven't touched on is we've done more IRS audit defenses than anyone else, and we've actually taken 5 crypto court cases to tax court, and we've been very victorious in those. So would love, the first place to start, if you have an immediate problem, is to schedule a consultation on our contact page with one of my team members, and we will give you a strategy for how to protect yourself.
Thank you so much. I really enjoyed the interview and all the information. I invite the community to visit your website, cryptotaxaudit.com. So thank you so much, Clinton.
Thank you. I should also mention we have a Twitter page at Crypto Tax Fixer on Twitter, where we're always actively posting things. Thank you very much for allowing me to be on your show.